So here we go right now with Google on after hours earnings report, 1:04 p.m. Pacific Standard Time, February 1. And we shot straight up to 820 and we had a closing print at 752. So right now we'll get ready to go over the quarterly results. As we can see, here we go at
Yep.
8. Well, no, here we go right now. I'm live on this thing at 8:20 right now, and we're coming down toward this 811 area. Over here on the GOOGL, we had a tremendous pop. This is after our earnings, and we can see how robust it is from that closing bell. And once again, we're going to go ahead and get ready and highlight the earnings and what Google did right. The preliminary number on GOOG was 8.67 versus 8.09. So that was quite a beat on the consensus estimates. Now let's get into the revenue cycle of 21.33 billion versus 20.76 billion capital IQ consensus. It's been a great run on this name. They've done quarter after quarter after quarter, been beating Alphabet pay per click or cost per click metrics, aggregate clicks that were in Q4. Look at, they're plus 31%. Now, one thing about this pay per click is that it had gone several quarters without beating on those pay per clicks, people that are on that program. So it tells us that companies are spending money in the pay per click. That's how they get rolling. And I would imagine part of the other thing with the YouTube and everything factored in, this baby's running like super fast right now. And we have calls. Yes, we're going to lose some money on the put side, but who cares? We're happy to. One guy asked me one day, I says, well, I was really happy to lose money on that. He thought I was crazy. Hey, if I lose 4 grand and I make 20 grand, do you think I care? No, I still make 16 grand. So that way we're on both sides of it. Could have went the other way. But it's all about hedging risk and mastering risk. So now, after we take a look, what I am getting is that, yes, it beats by 58 cents and it beats on the ribs. And that was a huge beat as far as that 58-cent number. But I'm letting you see just how fast it can tank. And right now, when we start getting some other headline numbers, we start really getting down into the various different things that Google do. And basically, we're going to have what we call the revenue segments. We're going to have the aggregate of the cost per click, and then we're going to have a conference call, and then we're going to find out what the free cash flow of 4.31 billion compared to 2.81 billion in the prior year. So, as we can see right now, there's a couple of things that they don't like. And once you start getting this data out, you can see where this thing is having this big retracement. And that happens as we discover more data. So it's live, it's here, it's right now, it's how to trade it, but it's going to tell us, Google is going to tell us a lot about the whole internet space. And we spiked right up here to that 820 level, and this is on a 60-minute chart, and you can see where we're printing at 802. Yeah, you could see it. You could see it. You could see the GOOGL over here printing 821. That one had really rocked to the high side. It had closed at 770, and the GOOG closed at 752. As soon as we can get some more information, I will break down that pay per click model. And then, like I said, we were suspicious of the pay per one click model because they haven't beat those for the last couple of years. So, what you see go straight up, you can see what? It can go straight down. Now, as we get more data, what we did here is we had the knee jerk reaction And one of our new MMTs, Mr. Sean, he's getting a full dose of these after hour reports, and we're still up big from 752. I just want people to understand here is they said something and now it has retraced. So basically, I'm going to go on pause and then I'm going to open this back up. And to all you people out there, we're on both sides of the market. And we also had some shares. We didn't have a lot of shares. It was 500 shares. And we sold out up here at the top when we started rolling down with some of our other big accounts, like super big accounts. So one of the things we're going to talk about is Alphabet in the January board expanded share repurchases by an additional 514,000 shares. Well, you know why? Because if they're willing to buy that many shares, then that shows strength and a conviction. During the fourth quarter of 2015, we repurchased 2.4 million shares of Alphabet stock. So basically, they repurchased 2.4 million shares of GOOG. And they did. And you can see why they did. Now, let's just take a look about that's 40 million of cost reduction during the 12 months following the close of the acquisition, including 27 million in other receivables and expenses. Um, One thing I can say, that repurchase buyback program is huge. And any company, whether it's a small one or a big one, you always would like to see where those repurchase buyback programs and the conviction from the officers of the company are willing to stand behind themselves. Now, one of the things that I will say for sure is that there was a total remaining authorization for further purchases of approximately, now listen everybody, 3.7 billion. The authorization has no expiration date. So right now in its filings, they're saying they're going to buy back $3 billion, have approval by the board. And that's basically everybody has been doing that since January of 2009. Now, Google had been absent in these repurchase buyback programs. So they can put at any time, any big purchases, there is no expiration date to that 3 billion. Now, what will end up happening is they always would like to have that repurchase buyback program in case something goes haywire. Or who knows what's going to happen in the future. But if something went catastrophically the other way, they're able to go in and buy $3 billion worth of stock. That's a great conviction out of the GOOG alphabet. Over here, the GOOGL, I will let you see it here. Watch, GOOGL. Now, here, GOOGL went right up to 840, and right now it's at 815. That's a huge pullback. Here, on the other side, the GOOGL or the GOOG, we shot up right straight up here, and you can see that the shorts got on it. You can see where some of the earnings are are having a little bit of conflict with the comprehensive part of the paid per click. And I said that early on in this video. And, we're masters at fundamentals. Enjoy the after hours. What? Volatility. Here we go. We were at 790 and we popped up back over here in the 795 area. Nonetheless, it's still a great analyst are going to try to upgrade it. And it's a good report. Remember, the close was at 752. And that's almost 38 points up from its close. And the GOOGL ran up to 842. And we can see right now where they're selling that news off of that extreme gap in price. How to trade after hours on what? GOOGL.